Hello,
Hey,
everybody. What is up? What is up? I still sometimes like to make these first parts a little longer than some of the other things because I have no idea when the stream actually starts versus a couple seconds in. But we hope you guys are all excited. It's been an interesting, a little bit of a slower week, but we wanted to
oh
jump
boy,
on here with Hamid, founder of Earnings
Evan,
Hub. Really smart guy. You've heard him come on the show and the
my bad. Hold
spaces.
the
Yeah.
fort down. I got 1 minute of something to do. I'll be right back.
You're good. You're good. You're good. But we're going to be joined by Hamid here, founder of Earnings Hub. A lot of you guys do know him. We want to use this 30 minutes, hour, whatever it ends up turning into to get you guys ready for some of these earnings that we have coming up next week. Dig through some of the just names, place, everything. Earning. We have Intuit and Zoom and Workday and Ross stores. So there are a few names here. We had a Walmart reporting earnings. Although we are a good bit of the way through earnings season, this next week is really the last hurrah. But yeah, so we are getting ready. We're gonna talk through some of these names. Next week though is pretty busy, and like I said, and you were talking there's some names this morning, this afternoon, which we'll want to dig into. But next week, this Wednesday, there's a couple names that I own. Actually, I have
NVDA, baby.
yeah, NVIDIA is a large holding for me, large holding for a lot of people. CrowdStrike and Snowflake are also names that I have a position in. This is the big one. This is the title of the space of the live stream, everything like that. Next week, though, we also have a Dell, a Marvell, a Firm, Ulta, so a lot of FinTwit names, Sentinel One, Webull, Autodesk. This Thursday after the close has a lot of names that people end up caring about. And yeah, Okta, MongoDB, and I think
Some
if we even switch
retailers
it
as
off
well.
popular and maybe go more towards 1 billion, couple more names might show up. Box is here. Nah, not that many. The popular covered. I know covered it. A lot of people have been talking about the Abercrombie and Fitch, the American Eagles of the world. This trade has been quite popular. So one of the two people on the stream has been playing an adjacent play to this one. So I want to hear their thoughts on this. But yeah, it should be an interesting time, interesting week coming up. If you guys are in here and you have any of those earnings that we were talking about there that you want us to dig into a little bit more, then yeah, feel free to drop that in the comment section. But Hamid, how are you doing, sir? I appreciate you for joining me. Everyone
I'm
on here
good.
knows you at this point, so you don't got to go in for the full intro, but I do want to hear just kind of what you're watching this week. Obviously, a couple of names we've talked around you, Robinhood and Rocket Lab are two of the larger positions for you, two of
Right.
your two largest positions. Then we also have names like Bumble, we've been talking about, Rivian, Tesla used to be in there. There's a few that I didn't mention. What is going on in your world? Obviously, we're pulling back a little this week. Markets
Yeah.
have been greener. We're still, when you look on the indexes and everything, maybe there's a couple names that are down 10, 20% off of the highs, maybe a little bit more, but the indexes are still not really pulling back too aggressively. So, Hamid, welcome back to the show. We're doing this weekly. Shout out to you. Shout out to Earnings Hub. What do you want to kick off the show with? How you feeling?
Well, it's interesting that Walmart reported this morning and had a little bit of a miss, it looks like, and the stock is down 5% as a result. I was actually talking about Walmart just the other day, and when you look at sort of like Walmart's price, where zoom in on that PE ratio at the top there. What is that? PE of 40. Like this is trading like a tech company with a growth rate of just 4%. And my view is that like who would buy Walmart at this price? A PE of 40 for an incredibly mature company with like a gazillion dollars of revenue, 600, almost $700 billion of revenue. I think it's the world's largest revenue company, right? So the growth rate on that kind of revenue is going to be incredibly slow. 4% growth sounds very, very tiny, but 4% growth for a $700 billion revenue company means, generating $28 billion more revenue each year. So it's actually kind of impressive, but 4% is such a tiny number that there's not much upside in terms of its growth. And then you can buy tech companies that are growing at 3, 4, 5 times that growth rate for a much lower price earnings ratio. So why pay 40 for Walmart? I don't get it. So that's my perspective
It's the
on
safety
Walmart.
trade. It's the prestige of it. I definitely get what you're saying, and I'm not running to grow it. Do they have
But
like
what
a
do you mean
dividend or
by
something?
safety though? Like,
I,
is there any stock that's safe?
I don't
Right? Like
know. We'll see. I
there's
mean, Walmart has definitely shown a lot of resilience in this market. When brick and mortar has been struggling, Walmart has not. So
Right.
yeah,
Yeah,
and this is kind of the Apple premium too. We sit here and it's like, what's going on here? Why are people buying this?
yeah.
And I wonder it a little more with Walmart. What's their dividend? They do have one. I'm seeing it. It's about, what's this yield here?
We actually have a dividend
0.8%,
tab on
0.9%.
Earnings Hub. Yeah, 0.8%. Like you can go buy AT&T and it gives you like 6 or 7%. The dividends are much higher elsewhere as well. I mean,
I'd rather own Apple.
exactly, right? Like, I mean, between Apple and Walmart, I'd way rather own Apple. I wouldn't want to own Apple either, but I'm just saying, like, on the desirability scale, at least like Apple has products that are like must-have products that you can't live without type of thing. Um, there's several of their products and they're much more likely to do something innovative and incredible and introduce some new product. Now, Apple under Tim Cook might not have a high probability of doing that, but at least they have the talent to be able to do something like that if they fix the top management, right? But
I mean,
anyway,
let's talk through some of the earnings that we have coming up next week, and then we could circle back on some more of the topics. So I wanna go
yeah,
this way. Obviously NVIDIA is the one that stands out here. Let's start talking here. NVIDIA earnings are incoming.
yeah,
Now,
yeah,
Meta's a
and
name that we're both watching a lot. When you're watching all these Magnificent Seven names, all the big spenders on Meta's AI chips, they're still saying stuff like, we could find an OpenAI comment from yesterday, which, let me pull it up.
that
OpenAI.
he said there was a bubble, or we're in a bubble or something. Is that what you're talking about?
The company is constantly under compute. The biggest thing we face is being constantly under compute. That's why we launched Stargate. Doing there is a lot more language coming like this from Jax. Basically, the summation of what I'm saying here is nothing we have heard for NVIDIA has been, or at least nothing we've heard for NVIDIA has been bearish. Nothing we've heard for this AI chips accelerator. Maybe you can argue AMD is making up their place in it. But I think the point being here is NVIDIA is clearly going to come in 16 out of 17 quarters beat on revenue, 15 out of 17 times on EPS. This is probably going to be another double beat. Market kind of goes in and knows that. The question here is how much. We're looking towards the forward guidance as well. I think that the question is, and what I'm starting to grapple with a little bit is how much will the market actually care on some of this stuff? Because whatever the guidance is, it's going to be probably lower so that they can beat it. And there's still
Right,
a lot of China. We don't know anything. We don't know how
right.
these trade restrictions are going to go. They're already talking about launching new chips and stuff like that. So for me, I am thinking that this NVIDIA earnings might not be what it comes out like, might not be what people are hyping it up to be. Not like NVIDIA, they're going to blow it away. That's what happens every time. I'm kind of talking about the market impact. I'm kind of
Well,
curious on how it's going to go. But yeah, what's your general take on NVIDIA, everything in general? That's a very hyper specific moment around the earnings.
yeah.
But that doesn't, it's about the whole journey. So,
Well, if you remember last quarter, they took a huge hit on the H20 chips that they were
yeah,
planning on
5.5 billion,
selling to.
right?
Yeah, maybe even more than five, but I don't remember the exact number. But it was multi-digit, billion dollars, single digit billions. But uh, technically speaking, I believe that's resolved, and they might be able to reverse a lot of that hit that they took and guide up. So they guided down as a result of the H20 or just the ban on China. So they might be able to sort of take some of that reverse that hit that they took last quarter, and they might be able to guide up for this next quarter. So the combination of the two things should have a very positive outlook for NVIDIA. Now, a lot of that is also baked into the price of the stock. So the price of the stock, I think, jumped quite a bit after the NVIDIA the H20 China announcement, if I'm not mistaken. So if you do a price chart of 6 months, you can see it's gone up quite a bit in the last couple of months right there. So how much of that is baked in is kind of unknown, right? Investors tend to want a pretty significant beat from the expectations, and sometimes the immediate aftermath of earnings reports might have a negative reaction on the price of the stock. But NVIDIA is solid in terms of like its execution. It seems to be totally on top of everything. The fact that Elon Musk just announced that they're canning Dojo in favor of NVIDIA chips is actually like another sort of point for NVIDIA, right? Like
I feel like
no one,
I look at a lot of headlines, and there are some ones that try and be bearish for Nvidia, but they always seem to be like explained away in other stuff.
right?
Net, every headline I see for this space is bullish.
Yeah. It seems like it's in a solid position. Now, what does the stock do? I mean, a lot of it is baked in. The price earnings is in the 50s, so it needs to
That's
grow pretty fast. But
Don't
it's
you think
actually
it's
not that
crazy? I
bad.
was look at the earnings hub score for a name this big. So if anyone hasn't looked at these earnings hub scores, it's like a good snapshot. This first line I'm looking at here, this is valuation. The second line here is growth. It's not the end all be all, but you kind of see stuff and stocks that you tend to look horrible on this are the ones that have low scores in both. Fast
Right.
growth names being high here, being low here isn't that crazy. You got to
Yeah.
remember, this is the largest company in the world. This is not the other companies. There's no company at the scale of
Growing
That
that's
Nvidia is that
yeah.
growing like this, and they're
Also,
like
like
they're maxing out.
yeah. Also, when you're looking at a company like this and its PE is in the 50s and Walmart is in the 40s, then you're like, well, I would way rather own Nvidia in the 50s
Yeah.
than Walmart in the 40s, right?
When
So,
you look at the
uh,
comparisons of PE for Nvidia now versus a couple years ago, it's much less now.
oh yeah,
So there are certain you can construe an argument to make Nvidia stock look cheap. You can do that for
for sure,
statistics play
for
for
sure.
every team. So you could probably do that for Apple too, but the argument is going to be much
Mhm.
easier to do that for Nvidia.
You can't do it with Apple or other companies without projecting all kinds of new growth that's not already there. Whereas with Nvidia, you could just simply say if it grows half as much as it has grown in the last year, it's a cheap stock, right? Like so. With Nvidia, you could even assume way slower pace of growth and still come out cheap. Whereas with Apple, you'd have to say like, oh no, they need to like double their growth or whatever in order for them to be cheap. So
We had a comment from John. Shout out John. Maybe we get him on next week with us to hang out. I don't love the way that when I pull this comment up, it's covering her face, but that
it's
will be a
okay.
problem we'll do later. He says Jensen said he thinks GPU revenue will reach into the trillions a year in a few years. And I think if you listen to Lisa Su and AMD, they're saying similar stuff now. Maybe biased, probably biased.
Yeah, I mean,
Definitely hard to argue it's not biased, but it doesn't mean that that's not the direction we've been seeing. And you
right.
can see, and all these investments, you've brought this up a little bit, and this is a question that I'm gonna have, and we're gonna get addressed in a couple of years more and more. Is what is the life cycle of these? What's the end of this? Is there like a do they go to crypto miners? Like, what is the H100 chip in 5 years? What data centers are those in? What are those powering? What is the value there? That's kind of my question. Is this, and I'm sure
Yeah.
we're gonna
What's
answer.
the
We're gonna get the real world answer soon.
knowing the life cycle of these massive data center, multi-billion-dollar data center deployments is important because if they have to sort of write those down in like 3 years versus 5 or I don't know how many years they're sort of planning on them, it would be humongous write downs. So all this capex spend actually goes onto the asset, the balance sheet, and they depreciate it over time. So if they have to accelerate the depreciation of those assets, then all of a sudden the spend is going to hit the bottom lines of Microsoft, Google, Meta, Apple, etc. Um, so they might not be able to continue those levels of spend if they have to depreciate them quickly. Now, if they can, if an H100 it continues to be relevant 5 years from now, then that it gives them even more time to utilize those assets. So it's actually a very good thing. And some of those questions are unanswered. But with respect to Jensen's comment about GPU or chip market basically being $1 trillion industry in a few years, I mean, that seems like probably a reasonable assumption. Now, a few could be, 8 is still a few years, right? 8 years from now, yeah, like I could see that. Um, so that's not out of bounds in terms of what's possible.
We got a question in the chat, so we'll go around to it right now. This guy knows you, Bull Bear. Shout out. Mead is Rivian seems to have stabilized around the $11.80 to $12 range. Do you think it has there? Do you think there is more downside ahead? Is the question is continuing. Yeah, any updated
Oh,
thoughts on Rivian? They reported earnings a little bit ago, right? Yeah.
I have no ability to predict any stock's price in the short term. Zero. Do I think that Rivian could trade below $10 in the next 3 to 6 months? Yeah, that's definitely a possibility. So, is there downside possibility? Absolutely. And could it be trading in at 15 or even $20 in the next 6 months? Yeah, that's also a possibility. Now, the way I look at companies and stock prices is that, like, where do I think this company is going to be 3, 5, or 10 years from now? And when I look at Rivian, 3 years from now, here's what will have happened for this company. We will know the result of the R2 line. The R2 line is their sort of mass production Model Y competitor. So they should already be in scale, building, if they're successful, a few 100,000, somewhere in the neighborhood of 200, 250,000 R2s per year, 3 years from now. And they have enough capital to get there. So we're not, unlike Lucid, we're not afraid that they're going to go bankrupt or that they need to continue raising capital from the Saudis or whatever to continue operations. So Rivian is in pretty good shape to be around 3 years from now, have a great vehicle that's being mass produced. And if there's demand for that vehicle, this company is going to be in great shape, and it's not going to be trading at $14 billion valuation, which is where it's at today, right? That's the way I look at it. And it's going to be some multiple of that 14 billion. It's going to be 2, 3, 4, 5 times higher. In again, my opinion, this is not like some investment advice, but that's the way I look at it. So in the short term, I have no idea what it's going to do. People could get excited because they have an AI day coming up in December and build up the price, and it could crash after AI day. Who knows? Like, all of those things are possibilities in the short term. In the long
I
term,
don't like to be that guy, Hamid. There was one time frame we're green on, just the 6 month.
yeah, but that doesn't
So
bother me. I
far.
love graphs like this, right? Like,
Yeah.
if you look at pull up Robinhood. Well, do the 5 year on this. Do the 5 year on this before you pull up Robinhood. Okay, so look at this graph, which is great because I bought it in the lows. I did not buy it at the highs on the left-hand side of the graph, right? I bought it in the lows in the past 2 years, right? So I've been buying between, I think my average price is around $12 or $13, somewhere in that neighborhood. And you can see it in Savvy Trader what my average buy-in is. Now, do this same graph for Robinhood. So stay on the price graph. Now, look at the left half of this graph, right? Like the left half of this graph is identical, right? Like you have a huge IPO, super excitement, and then crashes, and it's like trading at like $7 to $15 range in that entire like 2 year period, and then finally people are like, wait, Robinhood is actually executing brilliantly, and other people come aboard, and then now it's trading at 20 something times revenues, right? 25 times revenues or something like that. And the right side of the graph, you
Still a
never
B
know when
score.
that happens. You never know, A, whether or not that will happen. That's the risk. And B, even if the company is executing well, you don't know when that start is going to happen and the market and investors start to recognize it. So my bet is that a similar type of thing like this will happen for Rivian. Maybe not quite as high on the right-hand side of how like Robinhood is now beating its initial left side highs even, but for Rivian, you could easily have 5 to 10 time return if they execute and become a profitable company in 3 to 5 years, right? So that's a real possibility. And that's what makes me excited about Rivian. So
I appreciate the question. Bull Bear is appreciative of the answer.
you got it, Bull Bear.
Shout out, shout out. Are any of these names that we have reporting? That was a great explanation there. I have some. I wonder where Lyft plays into this, but let's go. Are there any more names that are reporting earnings next week that you're interested in? Any Hamid names here that I'm missing? I don't think so.
I've been a MongoDB customer in the past. We're happy about their products. Never owned the stock, but that's an interesting company uh, that's reporting. Obviously, on the retail side, Best Buy and Dick's Sporting Goods reporting on Thursday of next week. That'll be interesting as well. Although Walmart and Target already reported this week, so that there was some retail expectations set there. But yeah, like Dell should be interesting. Snow, obviously, CrowdStrike. What are you looking at, Evan?
What am I looking at? So NVIDIA, obviously, everyone is. Let's over
Yeah.
to the earnings. CrowdStrike is one that I own a little bit of. That it was kind of my gateway into the cybersecurity space, the way that I wanted to own. I bought it in that whole hack or whatever it was thing. It wasn't even a hack, but downtime thing. So I bought it there. Haven't owned it since. We'll see. That is one that I'm watching. Snowflake is another one that transparently I was buying around 130, 140, maybe 150, we'll say. And I did trim a little around 210, 215, 220. I'm still holding a good amount of the position. So a name I'm watching and hoping that it does well, but that part of that play kind of just ended up working out for me. And the chart on this
Evan, how
one,
many
yeah.
positions do you have in your portfolio?
Depends what you mean by that, of like what's an actual like position versus like what's on there for the watch list or a trade or whatever. Let's say
Well,
like there in the total there's like 60, 70, 80. There's a lot of names in
you
here.
have 60, 80 different stocks that you own?
But here's the thing, when you own a stock on Robinhood, it gives you a notification when they move 5% or something like
Right,
that. So some
right,
of them I just want the notification. For example, I own one share of Figma I'm holding on to, one share of UNH, 5 shares of Shopify. Like sometimes I'll be like, all right, I know this one's a decent name, like one share of Lockheed Martin, and I'll buy like 5 or 10 of them.
right.
I would say my top 10, my top 5, 10, 15, they tend to make up like 60, 70, 80% of my portfolio. And that's the
That's still a
Qs of
lot
the
of bets.
world, the Vus of the world. Um, of my invested money, let's say a third to 40%, 33 to 40%, 30 to 40% is in these broad-based market ETFs.
Okay.
Another third is probably in like probably honestly close to like 40%, let's say, is in mega cap names and Bitcoin, Ethereum. And then
Okay.
20% will probably be in just other random stuff.
I feel like we should have a discussion about your investment strategy at one point because, like, none of that makes sense to me, and I want
So
to
here's the
understand
thing.
where you're coming about it because, like, if you're trying to preserve a massive amount of wealth, your strategy seems to make a lot of sense, but like I suspect you can take a lot of risk and be perfectly fine, and you're not trying to preserve a massive amount of wealth. So
My thing
why
though
not
is
why not go a little bit higher risk? Go ahead.
transparently, I would rather bet on my business and myself
Yes.
than picking better stocks and things. So
No,
I
the
spend more
100%
time.
you should be
Yeah.
doing that. Yeah, most of 95% of your potential is actually like betting on yourself, and
So I don't want to
and
put
then
the time in to go and pick a lot of these individual stocks. Is kind of where this is going.
well, that's exactly my point. And therefore, like, how do you have time to pick 60 of them? Like pick five of them, and not investment advice, but you probably have more time for five stocks than 60. You know what I mean? And then the ETFs are just going to basically move with the market. So who cares about that? They're never going to be game changers in terms of what your portfolio value is. So why even bother with the ETFs? Um,
So my thing with the ETFs is, listen, like part of it is also not necessarily retirement money, but kind of fuck you money, where I can just have this in there. And sorry for the curse word if your kid's in the car, don't use that word, inside word. But what I will say is like just having that money so that I'm just safe and living off the things off the market is kind of what I'm going in there. Like for me, I'm not I'm not trying to. I see it. People make like young people and all these like fully income products. Like to me, that's a mistake. I still want growth here, but I'm not. I don't want to go like too far deep into the degens area. That's why, like, truthfully, I've been buying a lot of this ETF called QTOP, and what it is it's top 30 Nasdaq largest Nasdaq ETFs. Oh, sorry, top 30 largest stocks in the Nasdaq 100. So it's basically taking QQQ and making it more concentrated at the top.
Okay.
So there are stuff like that I'm trying to get on.
That's interesting.
Now, here's the thing. That does not subscribe to the why do I own a lot of these 30 stocks or whatever, 40 stocks. Some of it is also I bought Apple a decade ago, 15 years ago, and instead of selling it, I've just kind of built around it. I sold out my initial cost basis. Like, I'd say where I'm putting more of my new money is into that. And then, I'm not great at selling my trades all the time. So I've been loading into SoFi a little here.
I suspect if you were to like look at your returns and break them down by like the companies or the investments that you've made over the past decade, probably a significant portion of it comes from like your investment in Apple and maybe one or two other companies. And what's funny is that I bet you 10 years ago, you were the most excited about your Apple investment anyway. You know what I mean? And you were dead on right. And today, you're most excited about some handful of companies that I doubt is more than like 5. Maybe NVIDIA is one of them. Maybe Robinhood is another. Maybe Rocket Lab is I don't know what your sort of like ones that you're super excited about are. But like betting on those 5, the probability that you'll do significantly better. In fact, you should probably set up a virtual portfolio on Savvy Trader and bet on 5 things that you're super excited about today, and then don't even look at it for the next 3 years, and then compare it to how your portfolio has done. And I would bet $1,000 that, and we can donate it to charity if you want, that portfolio would beat your portfolio.
Don't make me sell. Okay, I did just sell one of my trades that I had during that's so if you want to keep going, we'll keep transitioning into
Don't do it because of me.
Let's play the game here. I'm looking through this of what names would definitely be in here. First one that came to mind that I would need in this portfolio would be Meta.
Okay, there you go. That's the one that you're excited about right now. I think
that's definitely the one that first came to mind. I can't lie to you, this wouldn't make it into this one, but I really hope this Honeywell trade works out for the second half of next year, that they end up splitting like a GE and it unlocks a lot of value. We're going through it
from a 5-year perspective, right? Like, do you think in the next 5 years Honeywell is going to do something amazing and exciting?
It wouldn't be on this list, but
then don't put it on this list. Let's create a 5-stock portfolio for you, just a virtual one on Savvy Trader.
No, I'll do it. I'll do it. Honestly, I have my competition. Yeah. But
what else? Is Google on it?
No.
Okay. Who else? SoFi?
No, maybe. SoFi is one of the ones that's a maybe. Robinhood is one that I'm leaning towards putting in.
Okay. What about Rocket Lab? You don't have any Rocket Lab, do you?
I do have a little bit of Rocket Lab, but not like a crazy amount.
Okay.
To me, AMD or NVIDIA or both. NVIDIA is definitely getting in there.
Okay. Okay. Let's make NVIDIA. What was the and AMD? Scroll down to the bottom of the page and click on the Earnings Hub 500. That way you can kind of see the 500 most popular stocks. There we go.
That's better.
So this might be a good list to pick from. So you got.
I like Amazon, and if I was thinking just names that I want in here, Amazon would be one. This is what problems. I just kind of become a Mag 7 person, but it just hasn't worked out that well. So I don't know if that's
again. Here's another criteria to think about. Like Amazon has, I don't know what, 500 billion in revenue. I want you to think of companies that also their revenue is going to be at least 2 or 3 times higher in 5 years than it is today. So is it possible for Amazon to have like $1 trillion of revenue in 5 years? Doubt it, right?
I don't know. All right, let's keep going.
You really don't know, or like
I genuinely think this robotics wave, the amount of revenue might not be that much, but the amount more profitable that organization can end up becoming from robotics, if that works out, watch out for that Amazon business, because right now it's valued off of AWS. But
Right.
if the marketplace can become a higher margin product, so maybe not the 10x revenue, but Amazon has some potential there. Nike, no. Snowflake, no.
Spotify. Wow, SoundHound is that popular? Number 54? That's
Yeah, it shouldn't be
crazy.
there. Whatever. We can zoom in a little too. Melee, Pfizer, Lulu, TTD, no. Maybe I just need to sit down later and go through it, but let's keep going. Let's
Yeah,
see if I
but
find one
yeah,
that
no,
gets me
anyway, so
excited.
like
No,
I
no, I
want
mean,
you
I
to,
got nothing else
I
to
want
do.
you
Let's
to
keep
pick
doing it.
5 stocks and put it in a virtual portfolio, and then we're going to compare it to the performance of your portfolio over time. But all right, what else do we have to talk about?
You got me distracted now. Let's throw
I,
Hood. We'll
I,
throw
want, I
Hood in
want to
here
convince
too.
you that the sooner you change that, but by the way, in my 20s, I invested a lot more like you than I then I realized after like probably a good 5 years, 6 years of no, maybe even longer. Yeah, maybe 6, 7 years of investing that I was an idiot for investing so broadly because I was basically matching the market's performance. And like, I didn't want to just match the market's performance. I wanted to way outperform the market. And the stuff that was doing the best was the stuff that I was super excited about. And then I was like, why don't I just make the bets on those companies? And that's it, you know. And then I started making only 2 or 3 bets at a time, and the performance just went wild from there.
What's up, Gav?
Hey,
Hey,
Gav.
finally
You're
got
good
this.
though. You're joining into a conversation. We were getting into. We're changing my entire investing style. It does need to happen. It's not wrong though. What I need to do, and I've been putting it off for a while, is I need to separate this portfolio. I want to get like a percentage in these broad-based market ETFs, 40, 50%, truthfully, in a couple of these ones, and then maybe go a little bit more into selective ones. Because I also, my largest holding has a lot of exposure to the single names that I'm buying as well. I don't know. I've just been putting so much time into. It's not even that. It's just that I put a lot of time in, and then when I want to have off, I don't want to go in and think about my portfolio and things. So for me,
You shouldn't
and
actually. What's funny is that there was a study, and I wish I could find this study, and I'm going to look for it at some point. But like, they were basically evaluating the portfolios of various different investors, and the best investors in the world were the ones that had already died and passed away, and they couldn't make trades, right? Like they literally were dead. People who were dead were better investors than people who were like constantly monitoring and managing their portfolios, because they picked some great companies and then they just held on to them for like decades, right? And they couldn't sell them because they were dead. And their, their inheritors were benefiting from their pick. So, my challenge to you would be pick companies that you think are going to be great 5 years or 10 years from now, and ideally ones that aren't already like multi-trillion-dollar companies, right? Like, maybe you pick 1 or 2 of those, but uh, at least 2 or 3 of them shouldn't be multi-trillion-dollar companies, and just do nothing for the next 5 years, and let's see what happens, or next 3 years in
the
that portfolio.
largest non-trillion-dollar companies, single stock ones that I own, in ranked order are Honeywell, then Hood, then AMD, then Eli Lilly, then Snowflake, then BM&R right now. We're going. I've watched out the BM&R trade. That one might work.
So,
Um,
so AMD, Hood, Snowflake, those are companies that could do something. Honeywell just seems like, it's gonna like be range bound, because Honeywell is never gonna release something that is going to be like earth shattering, and
So,
like.
but what they are doing is they're splitting their business into 3 separate parts
Okay.
in the second half of next year. So they're going to have I can look up exactly what it is, but there's going to be a quantum business, there's going to be an aerospace business, there's going to be an automation business, and then 1 or 2 others. So a couple of those areas, that automation one, the quantum, they have some segments, aerospace, that are in the right markets that have been brought down by some of their more traditional areas. So. Yeah,
When I think of Honeywell, I actually did a project with Honeywell when I worked at Microsoft 20 years ago. Actually, geez, 25 years ago now. And when I think about Honeywell, I think about the slowest moving company that is like hyper paranoid about making a mistake, and like they're not going to be the ones to do something incredible in aerospace. SpaceX is. Who's that new company that's trying to make a Mach 2 passenger
Boom.
jet? Boom is. It's not going to be.
Boom.
It's not going to be
Three
Honeywell,
big booms. Boom, boom, boom.
right?
Sorry. You can't do that.
Honeywell was like 5 years late on helping Boeing with like the 777 project. And don't quote me on that. I'm making stuff up, but they were responsible for a big portion of the avionics and things of the new jets, and they're just a slow moving company. They're not going to be some company that's going to amaze you and have amazing products all of a sudden in 10 years. And the splitting uh, of the divisions is probably a good move in that, like, hopefully it makes them a little bit more optimized, but you know it's still like the culture is not going to change overnight from this split.
Yeah, that is fair. I hear you. What do you think of Transmedics,
Yeah.
TMDX? Is that one you've looked into before? Gav, we can go to you. I know you said you were rugging.
Somebody was asking me about it the other day, and it's founder led. I love that. The revenue growth is like incredible. So yeah, it seems like a cool, fast growing company. It's not a cheap company. So, and I know nothing about the medical industry.
A earnings hub score for the record.
Yeah, they're it's probably because of their growth rate mostly. Yeah, and they're now profitable too. So that's helpful.
Gav, sorry.
No, you're all good. And yeah, I'm in this hotel and the Wi-Fi's awful, so I'm like catching sometimes every fifth word. But I am getting excited for NVIDIA earnings. Less than a week away at this point, correct?
Yeah, Wednesday of next week.
Yeah, so that's been like the big thing that continues to remain on my radar and what I'm really looking forward to. I have NVIDIA earnings right into a fantasy football draft, so I don't know if you can really top that kind of evening. I think that's top tier right there.
If you were a real stock market influencer, you would have taken that entire day off, which I did. I told them only day I can't do drafts is NVIDIA earnings day. Genuinely. So
Yeah, it's at 9 p.m.
there's
draft.
levels to the game, I
I'll
guess.
be okay. I'll be okay. It's 9 p.m. It'll be all right. But yeah, that I'm excited for and looking forward to. I think that the market's obviously had a bit of a change over the past week. Hamid, does it excite you, the activity that we're seeing kind of post a lot of the major earnings here over this past week, or we've maybe felt a little bit of weaker data? Are you buying more right now? Do you see a lot of opportunities?
So my largest positions are Robinhood and Rocket Lab, and I'm not adding to either one of those positions. I've actually trimmed them quite a bit as they've become such large portions of my portfolio, despite being excited about the companies, but they're no longer cheap, right? Like it's kind of like, the question about Transmedics is like, I don't know if I would be buying Transmedics at these prices, but I love founder-run companies. If I was, but by the way, um, in general, I think betting on founder-led companies and just like forgetting about it and for a decade or whatever is a great strategy. Probably much better than just betting on large companies that are run by a random CEO that is politicized and needs to sort of like build consensus in order to make any change or do things. So, no, the answer to your question is no, I'm not adding any more Robinhood or Rocket Lab, at least at current prices. I might if they drop significantly. But I have been adding Bumble because, again, it's founder-led. Founder just came back, recognized all the problems, did a ton of efficiency work, cut a bunch of marketing costs and $100 million annual expenses. That number basically goes straight to the bottom line. Reduced their staff by 30%, refocused the company on improving products, recognize that the product has lots of problems and it's like members are not happy in a bunch of different ways with the dating app services, not just theirs, but like also Hinge and Tinder, and it's hyper focused on getting that done. So I love that, and that's the kind of bet that I like to make. And the price is really really cheap. It's trading at less than 1 time multiple of revenues, and you don't find that in the software tech space. Usually you're talking about 10 times, 15 times, 20 times revenues. But usually they're growing companies as opposed to one that the revenue has been flat or down over the past few years. So, but there's a lot of potential. If she does turn it around, this could be an incredible story and incredible returns versus the risk involved.
Question, quick follow-up. I'm curious if, so founder-led company is pretty broad, right? Are there specific categories like within it where you're like, all right, founder-led company, but the founder has these qualifications or has worked at the company for this long, or things like that that you look at underneath that?
No, I mean, obviously, I like to like the founder. I watch interviews with them. I listen to how they talk. I listen to their quarterly calls. But like you look at all the companies that have been exciting over the past, 10, 15, 20 years that, you've been excited personally, even as like a teenager or whatever, like, they've always been founder-led companies, whether it's been a product that is from Apple, it was like founder-led that like turned things around, and like Steve Jobs comes back and like basically solves all the problems, introduces new world-changing products, right? Like that was all founder-led, right? You look at Meta, founder-led. You look at Tesla, founder-led, right? Like you look at Google, founder-led, all the way up until I don't know, 7, 8 years ago.
Tesla, not really, but yeah,
not lately, but
the current version of Tesla.
The character, the anime characters on Grok are
Oh my
distracting
God.
Elon for the moment.
So wait, does that make you bearish on Tesla when you see Elon posting this?
I just feel like Tesla is overvalued for the lack of focus that it currently has by its founder CEO, right? If Elon was 100% focused on Tesla and was trying to solve its problems the way he was in 2017, 2018, 2019, 2020, I think I would be way more. First of all, Tesla wouldn't have the problems it currently has, which it has released products 8 years ago. The Tesla Semi that is not out yet, the Tesla Roadster that's not out yet. It introduced a Cybertruck product with 500 plus miles of range and delivered 330. It promised it at 40,000, delivered it at 80,000. So there's so many misses on their part, and it's like, and the founder CEO, which by the way, I still would take, Elon part-time, as distracted as he is, over anyone else trying to run Tesla. There's no one else who could run it better than him, but like it just doesn't excite me anymore at $1 trillion valuation for $100 billion revenue company that is down year over year. Their revenues are down, and it doesn't look like it's going to go up anytime soon because Cybertrucks are not selling well, and the other products have already saturated. So, where's the growth going to come from? Robotaxis? No, not really. Like, not for the next 2 years. So, I don't think it would have the revenue problems it has if he was focused. So. Yeah.
On the plus side, Evan, probably sooner than later, instead of using this profile picture, we can get you a dancing Ani in stock market news gear, and she can represent you on the live streams.
Is that how you pronounce the name? Ani, not Annie?
Annie, I think it's Annie. Animate, or is that, I think, what it's short for, or something like that? Animated. So it's
anime. It's a Japanese anime character. Yeah. Annie and what's the other one? V.
V. Yes, they got the @V on X.
Okay,
very cool.
Christian Grey. It's fascinating to me. Like, 5 years ago, this guy was about solving, reusable energy and for Earth, and making humanity multiplanetary. And now he's like begging people to go animate their pictures and talk to these sex bots. I don't get it. Like, where, like, mind blown. I did not have Elon going this transitioning in this way on my bingo card. That's for sure.
Yeah, the Gunnar arc is surprising. Evan, what else going on?
If we want to talk today, what do you think of ASTS and Rocket Lab? I know Rocket Lab's a big name that, I'm not looking at the chat bots that much. I saw the tweet, but that's not, I like to look at stocks. ASTS and Rocket Lab, though. I know Rocket Lab is one that you own, and to me, it makes a lot more sense than the ASTS.
Real quick before we go on ASTS, to just address CJ in the comments. CJ, appreciate the comments. One, you say you are the same people who doubted him in 2017. No, we're the people that bought the stock in 2017.
I owned the stock since First of all, I owned the Tesla Model X since 2016. Put a deposit on it in 2015, and became a shareholder in 2015. Sold my shares in 2020, 2021, most of them. And then the last part, like last year, I sold my last Tesla shares. So no, I was the one who was jumping up and down. You can actually go to hamidshojai.com. I wrote a blog post in 2017 talking about how I think Tesla is a $3,000 stock price, or is a $3,000 stock within 10 years. And it happened even faster than that. But, split adjusted. But no, I've been a huge advocate, and I still am a huge advocate of Elon. I haven't
sold mine. I don't get it.
There you
go. Well, I haven't sold mine. I will say the other question was, XAI is his baby. Why are you complaining? Because I think that there's so much more that could be done with XAI. The way that he's showcasing it is, hey, make funny videos and talk to sex bots. Or it could be like, hey, here's how we're solving cancer with XAI. It's like there's just a range, a spectrum.
Also, it should be clear, we're not complaining. We're just having conversations about interesting topics, right? This is my opinions. You don't have to listen to them. But I'm not complaining. I'm just, I don't own the Tesla shares anymore, and I think Elon is a little bit distracted. He's one of the most accomplished humans on the planet, so I give him credit for all of that.
Would you buy, if you had access, would you buy XAI equity at this valuation?
At 200 billion, no. I would way rather have OpenAI at 500 billion than XAI at 200.
Okay, this is interesting. Why?
Well, OpenAI has, from my understanding, somewhere in the neighborhood of $15 billion revenue run rate this year, and growing at 300% year over year. And they're just executing brilliantly, right? Sam Altman, to his credit, I'm not a huge Sam Altman fan by any means, but I think he has a very sketchy history. I also think that the criticism that Elon has given him is somewhat legit. But he has executed really, really well, and it's sort of hard to dispute that they've just done an incredible job. And I think that revenue growth of 50 can easily continue over the next 5 years. So can I imagine OpenAI having $100 billion or even greater revenue within the next 5 years? Absolutely, absolutely. And $100 billion revenue OpenAI is easily worth $2 trillion, maybe more.
What do you think of this whole idea of isn't it still a nonprofit technically?
Yeah, but they're just trying to figure out the legal weaseling out of the nonprofit status, and I'm sure they'll figure it out somehow. There's just too much money involved and too many investors for them not to figure it out.
For sure. Evan, would you agree? You'd rather OpenAI at 500 billion than XAI at 200?
I don't know. I feel like I don't have enough information to really be able to answer that question. If you made me to think, I don't know. I don't get either. I don't get what we're doing. I don't I guess we're trying to solve AGI is what it is, but I just don't. I don't know. I don't see the business model with these. I don't see the $500 billion business model with this stuff. So there's clearly something being sold.
Wait, what do you mean you don't see OpenAI has $15 billion revenue run rate right now, right? It has subscribers paying it either $20, $30, or $200 per month per user. That's the business model. And there could be easily 100 million users paying in the next 5 years, right? So, you think about all the productivity gains that companies have as a result of being subscribers. My own team I'm paying for team subscriptions for everyone on my team, right? For OpenAI, and we use the APIs and we pay for that, which enables a lot of the features on
Is it possible to just share one login, or you have to buy individual ones?
Well, sharing one login is kind of like sharing your search history with all of your team. Like that just doesn't make sense, and it would be way too distracting. And
Or
like
if you guys are using it,
businesses don't make decisions that way, right? Like what business wants to have the same login for multiple users?
well, it depends on the size of the company. If it's like 3 people using it versus like 20, yeah.
But I even pay for my individual, like my kids to have OpenAI access. Everyone I know
What
is
is
paying
your
for.
kids' honest review of GPT-5?
I mean, they love ChatGPT. I don't know if they like. I
They
haven't
notice a
asked them
difference?
about like GPT-5 in particular, but like I think that there's no question that ChatGPT has changed the world, right? Like that, it's just their go-to for like answering homework questions and
Okay, I was gonna ask, do
and
they
study.
actively use it for homework? Like,
Oh, 100%. Who doesn't? Like you'd have to
I
be like,
didn't. My generation
oh,
missed out. I used freaking
when
Chegg.
I was going
I
to
had to
school, I
I
was
had to
going
scout
uphill in
I had to scout
snow.
through Chegg on a shared subscription with my classmates, you know? We didn't have all this. We had to walk uphill both ways.
Yeah,
Yeah,
yeah.
God. Evan, I remember being in one of my classes. Evan, were you on the Chegg grind as well back in the day?
Yeah.
All
On
right.
Quizlet or whatever it was.
Quizlet. Oh my gosh. All right. 2 funny stories real quick, Hamid,
I
that
don't
these
even know
kids
what
will.
that is, by the way. That's how old I am. So go ahead.
Quizlet or Chegg?
Either one of them. I don't know
Chegg's a stock. Chegg's publicly traded. Although here's the funniest thing: look at Chegg stock, pull it up, and look at the moment that ChatGPT came out.
it did it
This
get
is
crushed.
the biggest stock killer that you'll have ever seen. Pull out on the 5-year of
Wait,
Chegg.
how do you are you going to it so I don't have to do it or
Yeah, I can pull it up if you want.
what? How do you spell Chegs? I'm just trying to figure out
CHEGG.
CHEGG. Okay, there we go.
Funniest
Oh wow,
all-time
their
stock trade of
revenue
all
has
time.
just plummeted over the past few years. Wow. Oh my gosh, revenue of 500 million, market cap of 120. Wow, its price sales ratio is 0.2. That is insane. What? Wow.
I know, but look at that 2021. Look at that move. Look at it going up over the years, and look at ChatGPT come out.
Yes, holy macro. But okay, so what did these guys do? Educational services company,
So Chegg was basically a website where people, yeah,
materials.
If you
Wow.
essentially
copy
people would
paste, if you were
upload
taking
screenshots and pictures.
if you took your homework and copy pasted it online and took a question, it was either going to show up on Chegg or Quizlet if it was going to show up. So
Okay.
basically, that was kind of what this was, and maybe it was to guide you through stuff and get textbooks or whatever. But everyone used this to get answers on the homework and
That's so
for the
fascinating.
exams. And honestly, like if
Is it-
go in,
Is it founder run? Because turning around is still a possibility if it's founder run, but if it's not, then forget about it.
and everyone just uses ChatGPT now because with Chegg, it was like Chegg was like gosh, now with ChatGPT they can just dump the problem in and it's just going to answer for them. With Chegg, it was like you had to search through all the keywords, try to find the problem, try to find someone who would answer the problem, right? And
founder
look
run.
through and then plug that in. But I remember basically people uploaded like entire exams to Chegg. So I remember being in a statistics class and basically they were having the exam and the professor would walk, from one side of the class to the other, just looking at what people were doing on their computers. And I was sitting in the back for this, so I had a great view. So I'd see him walk to one side of the room. Everybody on the other side would swipe on their MacBook and they'd have the Chegg window up. And so you'd see the whole side of the classroom would swipe to see the Chegg, and then he walked it back, and everyone would just swipe back to their exam. And it was
how
like
funny.
crazy how that was happening. And so I wonder if it happens on here as well.
With ChatGPT.
And sorry if I'm rugging a little bit. I know my service isn't good, but I also have a hilarious Quizlet story. Real quick, hilarious Quizlet story. So I was in a class. I don't remember what class it was in college, but the professor, we had our first exam. I'd studied for the exam, got the exam, and I brought home the exam afterwards. And I was like, hey, I wonder if anybody else had the similar exam. So I Googled a couple questions and I found the entire exam was on Quizlet. I was like, oh, that would have been helpful to know before. So I went to that user's profile on Quizlet and he had posted exam number 2 for later in that quarter. And I was like, oh, I wonder like if this is going to be correct. So I show up to the second exam and all I've studied is this guy's thing, and boom, it's the same thing. And I'm like, holy cow, like we're onto something. So I like start telling my
That's
friends,
awesome.
I'm like, because the guy had uploaded final exam onto Quizlet, and the professor must have caught on because we all gotten hundreds on the second. We show up to the final exam, and we just studied this guy's thing that he's uploaded, and all the questions were different. And the professor got us on that one. So yeah.
Oh my God, that's hilarious.
All right,
funny.
I gotta drop off soon, but Hamid, I want to give you kind of some final words on this conversation. We talked about a lot of earnings on here. We talked through changing up my portfolio. I'll get back to you. The problem is the names I'm at on this 5 are Meta, NVIDIA, Amazon Hood, and maybe like SoFi. So like 2 or 3, maybe 3. You give me Meta in there. You own it, so you can't really talk too much about it.
No, I think Meta is in good shape. And also, like I was saying, you can take a couple of them that are multi-trillion-dollar companies, but if you pick all multi-trillion-dollar companies, it's going to be hard for it to like really outpace the market. But anyway,
well, sir, I'll come back with a couple more.
AI hiring.
But that's a good list right there. Like I will make a bet that list, whatever you come up with, those 5 stocks will outperform your portfolio if we put a date on it. Let's say we can even do it as early as 1 year from now. But 1 year, 2 year, 3 year, I'd be willing to take a bet on any one of those years or any one of those timelines. And we can donate to charity if you want or whatever you want.
I'm game. We're going to do this again, hopefully next week. If not that week after. You guys enjoy having Hamid on here. We enjoy having him, so I know we'll have him back. But we are going to dig into that, and I'll come back prepared and maybe give us a 5 or something like that. But yeah, Hamid, is there anything you want to leave the people with on this one?
You asked me about ASTS versus Rocket Lab. If I had to pick one, I'd pick, which one I picked, Rocket Lab. It has real revenues. It's growing its revenue base rapidly. Its founder CEO led, and which ASTS is as well. But Rocket Lab has a ton of accomplishments and history of just nailing it. And they're on track to make a reusable rocket, and their satellite tech continues to flourish, and they're making acquisitions to like complete the picture on that. And yeah, Rocket Lab is in a really good position to be the number 2 space company after SpaceX. So super excited about them. But yeah.
SpaceX 400 billion, by the way, in that little game we were playing earlier.
That's right.
Anyone wondering?
That's right.
I think I'd go SpaceX out of those 3 options.
I would go SpaceX as well.
Over ChatGPT?
Over ChatGPT. Yeah. I think SpaceX has even more potential going forward. And I think they're also killing it. They're probably the fastest growing revenue company from 0 to Starlink in particular is the fastest growing revenue company, except for OpenAI, maybe. So both of those have been like on these incredible growth paths.
I'm excited for it. I just can't wait for the day to start putting it on the airplanes. Please, God.
I know. I think United already has on all of them, but
I don't know about on all of them. I don't think so on all of them.
No,
but
not on all of them yet.
It's definitely starting to.
No, on Delta they say we're committed to fast, free Wi-Fi across our entire fleet. Now this plane is not ready for it yet, but all our other ones, I've heard that like 5 times. Guys, don't tell me this.
I took my first ever Frontier flight yesterday. They do not have Wi-Fi on those planes.
Do they even have
functioning
seats? I took Spirit.
Yeah. I paid for the nicer seat.
I had a business class on Spirit Airline, and the seat would not go back. The button was broken. I was like, okay, that's the last time on Spirit.
Those Spirit big seats are actually kind of nice, though. Like they have the giant.
When it doesn't move, it's not nice. I mean, like you couldn't. I was stiff. I had to like sit straight up.
I hear. It's not going to be great for sure. But luckily my experience was fine. But they didn't even have Wi-Fi on the plane. They were like, I asked the stewardess, I was like, do you have Wi-Fi on these planes? And she goes, like sad, like depressed, no. Like they get asked that a lot.
Yeah.
I was like, all right. Wow. Spirit has the one up. All right, cool. Evan, I know we got to wrap here.
I was taking us all the tangents today. Normally it's me doing this, but I appreciate you guys. We'll be on this one next week. Hamid, appreciate you joining us. If you guys have not checked out Earnings Hub, you are completely missing out. Hamid also has a podcast now of his own, if you guys didn't know. So go onto his page, check out that pin post, buy, hold, rant. I almost said pound on the table. I don't know why that one came, but buy, hold, rant. You guys filmed another episode yesterday. It's awesome. I appreciate each and every single one of you guys. We'll catch you all later.
Thanks, Evan. Appreciate it. Bye, guys.